Hello and welcome to this ADIPEC webinar on the topic of repositioning for success in the downstream industry. My name is Frederic Ozer. I'm a partner with Strategy and the global management consulting company, and I'm going to be your host for this session today. I'm delighted to welcome you to this interactive discussion where we will be discussing three main topics. First, we will touch on the impact of the COVID-19 crisis on the refining and chemical industries. In particular, we will seek to understand and differentiate between the short-term and the longer-term impacts. Second, we will explore the different strategic responses that the industry players are adopting to reposition themselves for growth. The players who will respond in the most appropriate and the most bold manner will probably emerge stronger from the crisis. And finally, we will investigate the resilience or not of the sustainability agenda in the downstream industry. Downstream players, even before the crisis, already struggled to justify some of the investments in responsible innovations, and will probably be left with less capital to invest post-COVID-19. So how will this sustainability agenda be impacted? Before we get started, I'd like to discuss a little bit and get you familiar with the screen that you have in front of you. You have a few boxes that you can move around at your convenience. In particular, I'd like you please to get familiar with the Q&A box. We want you to use it to send your questions throughout the discussion. We are also going to ask you 3 poll questions throughout the session today in order to get your perspective on some of the key questions that are shaping the downstream industry. Please do participate actively to make this session as interactive as possible. So we will be live for the next hour. We have with us a panel of distinguished executives in the downstream industry. I will quickly introduce them to you. Joining us today is Sabrina Platzek, Director of Refining Catalysts for Europe, Middle East, and Africa at BASF. Also with us today is Matthew George, General Manager Petrochemicals at the Indian Oil Corporation, and Yuri Hayek, CEO and Chairman of the Board of Unipetrol Center for Research and Education. We are looking forward to hearing from them about their first-hand experience in dealing with the COVID-19 crisis, and also, more importantly, to see how they perceive the downstream world evolving post-COVID-19. I'll ask each one of them to give us their introductory remarks. So let me first turn over to you, Yuri, to hear your high-level perspective on this unprecedented crisis before we dive into the details of our discussion. Yuri?
Thank you, Frederic. Thank you very much for this great opportunity. And I'm really glad that I'm sitting here today with such a distinguished guests who are particularly involved in the same situation where we are struggling, or I would not say struggling, we should rather say emerging ourselves in a new world. Why I use this expression is that actually over the last few decades, our industry, particularly downstream industry, was a little bit stagnant. We have seen mainly conversion of the heavy fuel oils or heavy stuff, heavy black mass to the lighter products, so increasing of the conversion capacity, but the portfolio of the products was a little bit stagnant. While what we are seeing today is completely different. Today, I would say that actually our colleagues, our partners, our customers are actually eager to acquire new type of products. The products which are sustainable, but also which can, let's say, make their own businesses more profitable. How do we get there? There are multiple options, and I'm pretty sure that actually we will discuss them in more details in upcoming 15 minutes. But what I would like to stress today is that actually the COVID-19 crisis show us how critical can be some particular transportation issues, such as, let's say, air traffic, air pollution, and especially production of automotive fuels. All those, let's say, products significantly dropped in the last few years, in the last few weeks. And we have seen, let's say, significant prospection, or let me put it this way, significant improvement in petrochemical business, which is positively replacing the production of the fossil fuels at this moment. What we will see in upcoming future is very likely in majority production of biofuels, chemical recycling, and utilization of renewable hydrogen. I will hand over back to my colleagues because they will for sure would like to extend this topic in a little bit more extent.
Sure. Thank you, Yuri. Over to you, Matthew, for your opening remarks. And I know you would like to tell us a bit more on how you perceive the recovery will look like.
Thank you so much, Frederick. And thanks to the organizers for having me here. So pleased to be with you all this afternoon. I suppose all of us are from the oil industry, so therefore we know that refining has often offset oil price declines in the crude markets, with margins and volumes typically growing as crude prices have fallen, but not this time. This time, while crude prices may have fallen a bit and then recovered, there's also a rapid decline in demand. And India, being a large transportation-driven economy, because it's a large country, it's a diesel-driven economy more specifically. In the month of April, when the lockdown was complete, we saw a complete crash in diesel demand, coupled with a crash in jet fuel demand, coupled with a crash in gasoline demand, which was an absolute nightmare for us refiners. You know, we had dramatic drops in the crack spreads. We had tanks full, inventory problems, where to put product, and inverted spreads, inventories, topping out across the fuel distribution and retail network, etc., etc. But we all know what happened, and I want to focus here very briefly on the positive side and what are we going to do to get out of this hole that we find ourselves in. And the real need at this moment is to rise beyond the specifics of COVID-19 and focus instead on what we can do to emerge stronger in the upcoming brave new world. So in our company, we have decided on probably a three-pronged attack on this particular aspect. One is that we need to have an agile operations mindset, which I will elaborate as we go along later, but basically to build in flexibilities into the various operations that we have. Second point is that we should take the long view and look at alternate scenarios without confining everything to the narrow sphere of probably project economics, because we can't have future projects suffering as a result of what's happening here, at least not in the long term. Finally, we need to build stronger partner ecosystems, technology partners, IT partners, banks, suppliers, vendors, and most importantly, the customers. I mean, this is a time when customers need our support. And if we just look at the books, the accounts, we may get a different picture. It's our duty to support customers. I have seen customers rising up to support us. So I guess as a big, large oil industry, it's our duty to support customers. And we have to have a specific focus on supply chain. Talking of supply chain, I just realized I made a LinkedIn post about this some time back. It's not a chain, really. It's a thin thread. It's so easily broken. I thought it was a chain, but I found out to my detriment that it's a very thin thread, easily broken. Now, you need analytics today, and I think Sabrina is going to be talking about a bit of that. You need the help of the banks, and you need customer experience management. Today is the day when the word CX, or there's even a CXO in most companies, it's so important in today's context. And finally, the behavioral sciences. In a big company like ours, we have seen problems with the employees, where we've had actual psychological issues with many employees. We've had problems in negotiations because people are not just used to negotiating over this webcam and video conferencing and everything. We've had negotiation breakdowns, etc. So anyway, we are hard at work reviewing what needs to go into the business continuity plans and thinking of the pervasive changes that are needed for operating models using the 3 dimensions I just mentioned. Investments that are in the early stages of development and projects targeting the final investment decisions in 2020 foresee postponement as the current situation intensifies and the uncertainty in the market growth continues. So companies are expected to rework on investment strategies for new projects, which could probably defer their FID plans. We try hard not to do it, but the reality is staring us in the face because the COVID-19 curve is not yet on the downward swing. Thank you so much.
Thank you, Matthew. Now over to you, Sabrina. I believe you're still optimistic as to the future outlook of the downstream industry. Please tell us why.
Sure, Fred. Always trying to be optimistic. And I could really very much resonate what Yuri and Matthew said already. And I think there are no doubts that our industries are going through a major transformation in the future. But for me, it's very important to acknowledge that this transformation, it's not a result of the crisis. It's not driven by COVID-19. For me, being a catalyst person, I always describe it as the catalyst, the accelerator that speeds up certain market trends and makes things happening faster. But the underlying factors, the underlying drivers have been there before. And I think we are discussing those for a long time. So for me, it's very interesting now to observe how people are managing the short term, the real crisis management, where it is important to keep our people safe, to keep the plants running smoothly and reliably, to serve the customer, as Matthew has pointed out, and really making sure we keep the cash together and we survive to have a better tomorrow. And there are questions that are raised, like revisiting investment projects. And I think here we have the chance to really connect it with a longer term. And if we do that well, it can be very beneficial to achieve our vision as an industry or as an individual company. But if there's a disconnect of the short-term priorities to what we want to achieve long-term, it can do a lot of harm. And I think, my colleagues touched on a lot of points already, but in the long term, it's pretty clear, at least for me, what are the key questions we have to answer ourselves. It's about sustainability. How can we decarbonize our planet? What role will circular economy play? Digitalization, I'm sure we are getting into this as well. I mean, we all experienced how to work virtually and remotely from one day to another. I think nobody could have envisioned that a couple of months before. If put that in a larger scale and just think about the opportunities an entire organization has if we go digital, it's just tremendous. And I think as a chemical industry, we still have a long way to digitalize our value chain. And then a last factor I want to touch on, because I think that also highlights my thought I had at the beginning. We also experience more and more a topic of deglobalization. And I think that was something we have seen before, that some of the countries had the tendency to show more protectionism. But in a crisis where, for example, critical medical goods were not available in the short term, and we realized they are only produced far away, and every country wants to keep what is needed first for their own people, I think this trend just is another accelerator, and we will see more and more of that, and we need some answers in terms of supply chains, localization of production, these type of topics. And I think it's fair to say that we have quite a major challenge in front of us, managing one of the largest crises, at least I have experienced in my lifetime, and hopefully this will be the largest. And then also being at a time where we have to set the ground for the future. And I personally believe if we don't see that as two individual tasks, but as one major task that is connected, I think we will do the right things. And then we still have a lot of reasons to be optimistic for the future. And with this, I will hand back to Frederick.
Thank you. Thank you, dear panelists, for the interesting and somewhat provocative insights and views that you've provided. I will turn now to our attendees for the first poll question of the session, which you will be seeing shortly on your screen. Here it is. Please do participate and let us know your views. So this first question addresses the impact of the crisis on the downstream industry. Will the shock caused by COVID-19 leave a lasting impact on the refining and petrochemical sector? Yes, the impact will be permanent. No, the impact will only be temporary, or the impact will depend on the response that the sector will propose. Please let us know your views on this question and the three options that we have provided. And while we wait for the poll results to come out, let me get Matthew's views on the depth and the magnitude of the impact. Matthew, as a refiner and marketer yourself, as you describe yourself, how has the pandemic affected the refinery and petrochemicals, commercials and margins in the short and in the medium term?
Well, what was shocking was the complete collapse of certain segments and certain other segments doing pretty well. I think Hiri mentioned that, petrochemicals. In fact, I handle petrochemicals in my current assignment. Petrochemicals hasn't done too badly, with the possible exception of aromatics, which has collapsed probably because of the textile industry collapse. I mean, none of us are buying any new clothes as of now, so I guess that was bound to collapse. But the polymer segment is doing well. The detergent segment, into which we produce a detergent intermediate called linear alkyl benzene, is doing exceptionally well. So petrochemicals has been a bit of a relief, but jet fuel has been a major problem. Well, gasoline has been a problem to the tune of about 25–30%. I would say that, naphtha has actually improved because of the reduction in gasoline and the emphasis on petchems. Other products have just stagnated. One must not forget that we had an ongoing MARPOL regulation in 2020, which involved reduction of sulfur across the marine segment. So we've actually, in consequent to the COVID-19, we've actually forgotten about it. But there has been a significant impact on shipping, which probably wasn't visible because it got hidden under the loss of volumes due to COVID-19. But that's something which is going to catch up with us in short order. And as I mentioned previously, there have been inverted margins. For example, my company sells butadiene to Sabrina's company. And we have a specific case where the price of butadiene is below the price of naphtha, out of which it is made from, which means that you're at negative margins in a certain product. Now, the other thing is the disconnects which have happened in pricing. We guys who've been in the oil industry over so many years, I've done now 34 years, we are always used to a certain relationship between the various products, as it were. Now, that's gone for a total toss. Today, you just see naphtha is at a level about 400 or so. Your ethylene propylene are 800, which is very healthy over naphtha. Certain others are below naphtha. So, we had hedges running. We had contracts running on underlying feedstocks. Those have gone out of the window. So the customers have had to come back to us. We've had to go back to the customers to rework those contracts. So these kind of issues have happened. The significant demand drop, normally in India, and I want to speak a little bit about India, we consume about 18 million tons of petroleum products in a month. That has dropped to around something like 15.5, between March and April. And it's gone further down by about another million tons before starting to slowly recover now that they have reopened that. But it's my belief that the crisis is not yet over. Our numbers are not encouraging. We are over 900,000 cases as on date and climbing. So we haven't reached the peak yet. Certain states in India have done well, certain others not so well. So we are still very, very tentative as to where this whole thing is going to land us, and fairly concerned about the investment decisions that we've got to take. Being a national oil company, the government, of course, is very keen that we continue on our investment plans without any trammel or constraint. But ultimately, cash is king. Cash flow will speak. And right now, the cash flow is not speaking. In fact, it's rather silent. It's rather quiet. So that's a fair amount of concern. We must also not forget that the oil and gas industry is experiencing its third price collapse in 12 years. After the first two shocks, the industry rebounded. Business as usual continued, but this time it's different. The demand side is what's taken the toll this time around, combined with a global humanitarian crisis. You guys must have seen some of the pictures from here in India. We've had a large population of migrant labor who have moved across the country to work in other states, maybe a couple of thousand kilometers away. They've had a hard time reaching home. There were people on the road. We've had all kinds of issues. And this migrant labor not coming back has affected certain segments of the downstream industry, especially in petchems. I mentioned textiles. Even smaller plastic industries have been affected very badly. Any labor-intensive industry has been, in fact, affected. Now, we now sense the change is inevitable and possibly permanent. I mean, at least the way we're going to look at it is going to be different in future. But I would, again, agree with what Sabrina mentioned in so many words, that the COVID-19 crisis accelerates what was already shaping up to be one of the industry's most transformative moments. Without fundamental change, I don't think it'll be difficult to return to attractive industry performance that has historically prevailed. Thank you, Fred.
Thank you, Matthew. Let us go back to our poll results. I presume they should be out by now. So if we can put them up. Yes, and so we have, yes, the impact will be permanent for around 17 to 18% of our audience. No, the impact will only be temporary for around 28% of our audience, and the majority at 54% believes that the impact will depend on the response that the sector will be proposing. This is interesting insights, and let me go back to Sabrina, and I'll address a similar question to you. So, do you think that these short-term demand disruptions that we are seeing, will they have a lasting impact, or do you think that the structure of the demand has structurally changed?
Mm-hmm. Thanks a lot, Fred, for the question. And I think the good thing with the question we have here in the poll is there's no right or wrong answer, because actually I think every answer can be right. So if we look at the very short term, the impact we are currently seeing, or where we hopefully are already kind of going away from, I think this deep demand clash, I mean, this is definitely temporary, and this is driven by the lockdown measures we have seen in most of the countries by now, and probably this will change. However, and coming back to my picture of a catalyst, I think this experience we are currently making, this will have a longer lasting impact on our personal behavior, but also how we see certain things in the world. So for example, driving every day to work, will this still continue to happen? People probably, we had recently a survey within our own company where we got feedback from our employees that most of them, they would prefer to have like a hybrid model where you can still remain working from home and have other days where you can go to the office to socialize. So I think there will be some trends that will have a longer lasting impact. And if we look more at the, let's say, the fundamental structural changes that could be a result of this crisis, I mean, we see that on the one hand side in the industry players, like a consolidation of the industry could happen. I mean, we already see that some of the winners of the crisis are or tend to be more the bigger companies because they have more cash reserves. They're a little bit more resilient to really survive those bigger challenges. So I see on the M&A landscape, consolidation, this will be a topic. Some companies will also use that as a reason to clean up their portfolio. So divestiture, the other side of the coin, will happen. And then the trends we have seen before as a further accelerator by the crisis, as I have mentioned.
Okay, thank you, Sabrina. Let me take our first question from the audience. Suhail Akram from ThyssenKrupp Industries. is asking our panelists, first of all, commenting that COVID-19 has only accelerated the trend towards peak oil, especially in the transportation fuel sector. So how do companies embrace the new reality of these new business models? Let me address that question to Jiri. Again, there seems to be a belief that the crisis has accelerated the peak oil and some of the more fundamental and structural trends. And how do you see companies facing this new reality?
Yes, for sure. Thank you very much, Fred, for this question. To cut the long story short, let me put it this way. It is obvious that actually some companies were in kind of preparation of the investments, reflecting, let's say, new projects which either should improve or empower the sustainability or chemical recycling. Today, it is obvious that actually only the project with very high profitability and very high margin, and mainly with very high CO2 savings will be supported. The question is, who will invest in those projects? Matthew already mentioned that actually the majority of those projects will require some cash. So the healthy companies, which are actually equipped or actually well positioned and can afford the implementation of the projects, focusing some further extension of feedstock portfolio or increasing of the portfolio of products, including products based on either recycled or renewable type of feedstock, will probably dominate in upcoming years. The question is, of course, what will happen from the customer point of view? Can the customer afford, or will there be an appetite from the customer point of view to purchase the products which may be more costly, the products which may be more, let's say, less fashionable, but because of the fact that actually they are made or they are designed in the way which will enable recycling. This is actually a second story. So on the one side, in the post-COVID environment, we will accelerate the things which will for sure enable us to, let's say, exploit renewable type of materials. But on the other hand, we are a little bit afraid that actually there will be some, let's say, less appetite or less reflection from the customer perspective, just because the cash will really matter. And especially in the European territory, there is a strong perception that actually the absence of high turnover in European countries will result in lower demand. And the question is, what sort of products will dominate in upcoming future? That's something what we need to address, and that's something what we need to question ourselves. What do we want to sell?
Very interesting, Jiri. Thank you very much for these insights. So given that we started talking about the future, I suggest we move to our second topic of the session today, which is really about the strategic responses that the downstream players are and should be adopting to emerge from this crisis, even potentially stronger or more resilient than what they were before the crisis came to us. So this is also the topic of our second poll question of the session, and that will be appearing on your screens very shortly. So which of the following strategic responses to the crisis should downstream players adopt to reposition themselves for growth? Is it cost reduction and deferral of costs, digitization, value chain localization or supply chain localization, mergers and acquisitions targeting further consolidation in the industry, or finally, incubation of clean and renewable businesses. So we'd like you please to participate also in the second question and give us your opinion about what are the strategic responses that you believe will provide the downstream players with the competitive edge to emerge stronger from the crisis. Of course, these are all important initiatives to take, but which one do you believe is the one that will differentiate one player from the other? And while we wait for the poll results to come in, let me ask Sabrina about specifically the role of digitization initiatives in achieving greater efficiency and, more importantly, supporting the further growth of the downstream industry. Sabrina.
Thanks, Fred. And I like a lot how you phrased the question, because digitalization itself, it's just another buzzword and something that is in everyone's mind and everyone sees everywhere. But at the end, it needs to have a purpose and it needs to drive something, let it be growth or let it be efficiency. But we need to connect it with something, and then it becomes also a business case at the end. So when we talk about digitalization, it's very interesting. If you look at the various industries, you will find that the petrochemical and the refining industry is actually very far behind when it comes to those initiatives, just as a general statement. I mean, it depends by company, of course. And if you look more into the details, it's not because we missed the boat or we weren't interested in digitalization. It's really because, I mean, our industry is heavy asset-based, and whatever you want to digitize, if you really want to have a big impact, it becomes, or it comes with a lot of investment needs. So there's other industries like entertainment or media. It's different to digitalize them. So knowing that, I still think, we need to focus on what we can do, because the impact is so huge. I mean, just imagine a refinery or also a petrochemical complex. You all know how dependent different units are from each other. And I mean, also in the context of the crisis, complexity becomes key. And those players who have options, who have more complex setup, who can switch from fuel oil to petrochemical products, they will be the winners. So everything gets more complicated and everything gets more interconnected. And here, if you really have a good big data approach that is linked then with artificial intelligence, so something that can analyze the big data, it doesn't make sense just to have the data. But if you have a way to really connect those dots and try to find an optimum in terms of how you run your operation, there's a huge potential. I mean, right now we have armies of people in our companies trying to find that out and looking at various scenarios. And it's just not at an extent like a computer could do. So this is just one example. Others go further into the customer experience, like new business models, different customer touch points. I mean, we could talk about this for probably a separate webinar, like in a full hour. But there are really a lot of opportunities. And I think it's each company needs to come up with their own roadmap and see where the biggest lever is, because you can't start everything at once. We need to have some priorities and then execute on this.
Okay, so Matthew, do you share the same views at the Indian Oil Corporation?
Well, I do. I must agree with Sabrina. And one of the things that I want to talk about is, many of the larger refining marketing companies are already digitized to a large extent. The only problem that we've had is these digitization platforms have not been really linked end to end seamlessly. So one of the things that we are now trying to do is, right from the retail billing stage up through demand capturing and coming up to the crude optimization, transportation optimization, refinery maintenance. You went to take a specific shutdown, for example, for a particular unit. We are trying to bring it all onto one platform, very similar to what the airline industry has done. As you know, they have a very, very strong maintenance setup, which is linked to the flight schedules across different seasons. And something similar we're trying to work in our particular company already. And we feel that that'll probably bring in some flexibility to the whole thing. After all, what are we working for? We are now working on the basic pretext that we are going to manage the resumption of demand. Now, how much the demand will be, the jury is still out on that, but we are working to manage the resumption of demand. And inventories will be nearly full as we emerge from that lockdown. And managing the pricing and drawdown of those inventories are going to be very critical. And digitization is going to help there. And you could end up with a situation where you sell your inventories at a notional loss. So how are you going to manage the financing for that also is a very, very big question. People are looking at establishing a broader set of markets. And most importantly, you're trying to establish emergency protocols which will save your people. I mean, there's a lot of focus on employees as of now, because in a large industry where a large number of people work, there are cases, there are transmissions, and we are working out ways as to how can we avoid that. It's probably too early. None of us are doctors. It's probably too early for us to comment too deeply on that. I mean, at best we say that we're trying to just do what others are telling us to do at this moment in respect of protection protocols. But yes, that is also a very, very major, aspect at this moment. In short, and in order to sum up, to change this current paradigm, we will need to dig deep, and we have a proud history of bold structural reforms, innovations, safe and profitable operations in the toughest conditions. It's our history as oil companies. And the winners will be those that use this crisis to boldly reposition their portfolios and transform their operating models. And if we don't restructure, we will inevitably atrophy and die. Thank you.
Okay. Thank you, Matthew. So let's take a poll. Let's take a look at the poll results for our second poll questions and see the audience perspective on the most appropriate strategic response to the crisis. So if we can go back to the poll results. Okay, very good. So around 15% of the audience believes that cost reduction and deferral is the most adapted response at this stage. 33% for digitization, around 26% for value chain localization, around 11% only for M&A targeting further consolidation in the industry, and then about 24% believe that incubating clean and renewable businesses is a key competitive advantage for the future and to respond to the crisis. So a majority actually believe that digitization will play a key role, followed closely by value chain localization and incubation of clean and renewable businesses. Matthew, let me get back to you on one of the points that you raised. So do you believe that cost agility, and here we have 15% of people who believe that, do you believe that cost agility is going to be sufficient for the downstream industry to recover?
Well, let me put it this way. We are working on smaller volumes at this moment, and that's a reality. Given the fact that we are working on smaller volumes, it's very, very difficult to achieve the cost efficiencies that we target or that we need to target. So it goes beyond that. Like I said, it goes around building up a whole partner ecosystem. One of the things that this COVID-19 pandemic has taught us is the importance of partnerships. In the business that I handle, I have realized that long-term customers who've been with us for 10 years or more are more likely to stay with us without too much of a fuss, even though we probably did not treat them the way we should have. So the lesson I've learned is the partner ecosystem, enhancing the partner ecosystem is probably one of the biggest things that you can do. And that actually serves as a cost reduction, let's say a cost reduction parameter. In the oil industry, which is capital intensive, which is manufacturing intensive, you have to have larger volumes to really reduce costs. It doesn't help by, changing a few people or, downsizing in that sense of the word, or probably, looking at a slightly different portfolio, although that does help. For example, people who have the agility to go into petrochemicals, they have an option to maximize margins. But sadly for us, cost reduction in a reduced volume scenario is a little difficult. The airline industry, I'll use their example again, they are struggling with the same thing. You could see that Singapore Airlines, one of the best airlines in the world, and Emirates, the number of aircraft they've grounded, 70% of their fleet on the ground. And then you say cost reduction, where's it going to come from? There's a cost to that grounding also. For example, when I idle an asset, there's a cost to that idling asset also. So it goes a little beyond that. It's not just cost reduction. The best we can hope for is to tap into new markets and new products and enhance our partner ecosystems to deliver better value. Thanks, Fred.
Thank you. So Yuri, building on that, do you think that clean and renewable sectors and agenda would provide that these growth prospects that Matthew was talking about? Is this an avenue that downstream players should be exploring to actually look for new growth areas?
As a representative of R&D, I cannot have different answer than yes, but let me put it this way. For sure, from the long-term perspective, we have to understand that actually we will have to adopt new technologies, how to produce the products which our customers are used to use. But on the other hand, we have to understand that actually, and Matthew touched it already, he gave the example with the airlines. If you imagine that actually your refinery is producing certain amount, certain proportion of Jet A1 or similar type of products, which is mainly used in transportation sector, and suddenly your demand drops by 30, 20, or maybe in some regions by 40%, what you will do? You have to find a way how to economically utilize your asset. You simply cannot operate if your technical availability or utilization of your refinery is below 50, 60, 70%. There is no refinery of that kind which can survive the upcoming period. We have to find a way how we can utilize the existing asset while adopting the new type of materials which we can process and which can deliver the same performance, or maybe in some extent even better performance than the traditional materials or products which our customers are used to use. To cut the long story short, in Europe, we are mainly focusing on co-processing of, for instance, vegetable oils or used cooking oils. And I believe that actually these sort of approaches will be spread all around the world in a wide extent. In the future, we will probably see purchasing of, for instance, alternative type of feedstock via existing petchem complexes. And hereby, we will simply reduce, first of all, our dependency on traditional type of fossil materials, but we will also empower, let's say, our position in the industry in the way that we will accumulate or actually utilize the existing asset and add a new investment opportunities to absorb new type of challenges which are related to our downstream industry. The challenges in Europe are mainly focusing on, as already mentioned many times, CO2 emission reduction, reduction of the waste generation, reduction of, let's say, carbon waste. And our ambition in this segment as R&D, our ambition is to simply stick to the existing asset and learn the people how to utilize what they have already at 100% capacity, ideally. We know that actually there is no such a refinery which runs permanently on 100%, but at least to stay as high as possible while producing what we were used to produce in the past, what our customers are used to utilize. Thank you, Frederick.
Okay, thanks. And I'll take another question from the audience. It's from Anish Goswami from the Indian Oil Corporation. So I'll also turn over to you, Jiri, as well. So the question is, do you think that the various alternatives coming out of the usage of green fuels can pave the way towards a net zero carbon usage plans of the different companies?
That's a challenging question. Thank you for this, Fred. On the other hand, we have to understand that actually, first of all, there will be some capex associated with these projects, and we cannot expect that actually the payback period of such a projects, the IRR, will not be probably as low as possible. But actually, this is not the challenge only for the downstream. We have to closely collaborate with the local municipalities, with the local governments, which hopefully, in the ideal world, will support our activities and will provide room to accommodate the new products, which will probably be more expensive, but will have some profit for the global society. In other words, let me put it this way. If you imagine that you will simply rely on a renewable type of feedstock, you have to acquire the material somewhere. The question is whether the government and whether the local municipalities will enable or will simply implement some measures which will enable you to collect this sort of material at relatively low cost, or even they will allow you to process this sort of waste. For instance, today, most of the refineries are simply designed to process materials which are based on fossil type of feedstock. But on the other hand, we are now switching to a different type of material. So the municipalities will have to accept the fact that the structure of the refinery will probably stay very much the same as it is today. But on the other hand, type of materials will be extended by waste materials, hazardous material, which were not used to be processed in this type of environment in the past. That's one thing. The legislative is also not designed to, at this moment, in the entire world, to accommodate the new type of materials. And we need to understand that actually those who are setting the rules will need to give us the room to accommodate the new type of feedstock on the market. Otherwise, our, let's say, initiative will be just a waste of time or waste of money or waste of potential. So the major challenge, which is related to the CO2 reducing initiatives, a part of efficiency improvement, is basically to acquire sufficient amount of feedstock. And frankly speaking, that's where I see the major struggle. In the global world, we will struggle, and we are struggling already today because the European refiners are simply collecting most of the vegetable oils or used cooking oils from various parts of the world, like Southeast Asia, China, or South America, And that's not the way how it should be. So the question is whether we will manage to acquire this sort of material from various parts of the world in the same scope as we did it in the past with the crude oils. Otherwise, we will have to switch to a different type of energy source, and this will be the sun, which is available to everybody. But then the question is how to convert effectively the energy from the sun to in the way that it can serve to all of us in effective manner. Thank you.
Thanks. Thanks, Yuri. So this takes us actually right to our next topic of discussion, which is around the relevance and the resilience of the sustainability agenda at this stage. And how will this agenda be affected by potentially other priorities taking center stage, given the crisis that we are going through? So this is also the topic of our third and last poll question of the session that will be appearing on your screens shortly. So how will the shock caused by COVID-19 impact the downstream industry's sustainability agenda? Negatively in the short and long term, negatively in the short term only, or positively? And while we wait for the results to come out, I'll turn over to Sabrina to ask you how firmly is the sustainability agenda today ingrained in BASF strategy, for example?
Thanks for the question, Fred. And actually, that's a very good one, because we just renewed our corporate strategy at BASF a year ago. And sustainability is basically the integral pillar on which everything else is built on. And the way we understand sustainability, and maybe one comment to Yuri, I fully agree with you, sustainability and transforming our industry into a more sustainable world in the future, this will cost money. And I mean, we are talking about investments and we are talking about resources that need to be directed. But when we reviewed our strategy in BASF, we also saw that in the mid to long term, this will be a business model, and this will be also linked to where the profit will be. And this is, on the one hand, obviously driven by regulations. And coming from Europe, sitting here in Germany, I mean, you all know in the EU, I think we are already a little bit more advanced when it comes to the Green Deal we are discussing, and also some cost on carbon as an example. So I think it also requires a mindset shift from all of us, that this is not a cost investment, but it's something we have to do to be successful in the future and to make money, and we get a premium later on. The question is when and where and how. I completely agree that we still need to figure that out, but I think it's necessary. And I think we are also in a situation where time becomes key, and it's kind of a race who will be figuring out it first. And there will be some overcapacities in the market, and there will be definitely a wave of rationalization coming. I think that's the truth, and we have to acknowledge that. But the companies who are fastly adapting and coming up with a solution, making us more sustainability and supporting the bigger target for the society, they will survive. I firmly believe that, and this is also how we set it up in the strategy. To give you an example, I mean, BASF is currently very much innovating into the area of chem cycling. So this is also what Yuri mentioned in the context of refineries, where you basically use plastic waste as an input source, and then you convert it into more valuable products. I mean, there are various of initiatives going on, and also a lot of startups in the industry trying to come up with a solution. But I see that as one big topic going forward. So whole concept of circular economy, and also like when we talk in a sustainability context, it's not only the ecological piece, it's also the society, and how can we create added value as a chemical company, but also in the chemical industry to the society. I think that's where collaboration will take a key role, where we have to get together as a key industry player and figure out what does it really mean? Why are we here? Why are we needed? I think everyone will acknowledge that a world without chemistry, that it can't exist, and this is critical. But I think we need to do a good job in also explaining that to the broader audience. and making sure people understand how we contribute the value.
Very clear. Thank you. So let's take a look at the poll results on our screens. So it's quite a distributed result, actually. So 22% believe that the sustainability agenda will be impacted negatively in the short and the long term. 46% believe that it will be impacted negatively in the short term only, and 32% believe that actually the sustainability agenda will be impacted positively. So Matthew, do you share this view, or do you believe that short-term profitability and liquidity considerations will supersede the long-term objective of sustainability?
Thanks, Fred. Very interesting question. Let me answer it in one line to begin with. My heart tells me that the outcome will be positive on the sustainability industry, because indeed, as it should. We can't afford to lose sight of that agenda in this temporary measure. That's what my heart says. But my head still tells me that cash speaks. And right now, we are struggling to find funding for it. And, you know, the funding requirements anywhere in the world, banks are a little reluctant to lend. Let us not forget that as an industry, the oil industry has consistently underperformed on the Standard & Poor 500 rating for return to shareholders over the last decade. So already we are no great shakes in that sense of the word. So my worry would be, who would finance us in this agenda? This is where I think the role of governments get magnified. There is a famous saying, as you know, necessity is the mother of invention. Sometimes in countries like ours, legislation is the mother of invention. You know, what it would probably take is for the government to come down and set out a framework and bring in some rules, and probably the funding would follow from the national banking systems. But yes, funding remains a principal concern in this aspect. We would all like to continue with the sustainability agenda as it should be, no doubt in that. But on the positive side, let me also say that this particular opportunity of rejigging our product portfolios, which inevitably has to be done, probably would throw up small opportunities to get going on the sustainability side of it. Couple of things we are seeing, and I still believe this COVID-19 has only accelerated that which was already coming, the inflection point in the oil industry. Maybe electric cars are going to come much sooner. They're already there, but they're going to come in a bigger way much sooner than what we thought. Already my company is, setting up electric charging points at our retail gasoline stations. So that transformation we are already seeing. So I guess, yes, it would set people thinking, and hopefully something very positive would be born out of it. But yes, the financing side needs to be looked at. Thank you.
Thank you. Matthew, for this great perspective. This brings us to actually the conclusion of this webinar. Some very interesting takeaways indeed emerging throughout this discussion and also throughout the attendees' voting and participation. Let me quickly summarize. I've noted that there is a firm belief that COVID-19 has while it has violently hit the downstream industry, it has only acted as an accelerator of some of the trends that had already started impacting the industry earlier on, such as fuel demand decline, for example. The other takeaway is that there is a common view that short-term crisis management and tactical responses are critical, they are important, but one should not overlook the long-term strategic responses, such as, for example, digitizing these players and these companies, localizing the value chains, M&A as a source of consolidation, etc., which will position downstream players for future growth. And then lastly, sustainability is perceived as a long-term trend that is here to stay and that is fundamental to the industry despite the short-term disruptions. So before we close, I'd just like to remind the audience, for those who are interested, to submit your papers for the ADIPEC Downstream Technical Conference in November 2020. And with that, I would like to thank you all for attending this webinar, and many thanks also to our panelists, Sabrina, Matthew, and Yiri. Bye-bye, everyone, and see you soon.
Thank you. Goodbye.
Thank you.